pleasure to be here today, talking about innovation at the intersection of regulation and cryptocurrency. I really liked your intro about your prediction for the future because such things that seem so obvious now at the time seemed like bold predictions, right? And I think that it's a great segue intro into this clubhouse that's the next big bold prediction by 2030, right? Every company will be most likely using some form of distributed ledger in some way, but especially in financial services, I see this as a big move as we're watching the advent of open banking. That's not just big in cryptocurrency and blockchain, but in banking in general and fintech. This was the move over the past couple years as cryptocurrency is growing. So it's an incredible time to be here, and thanks for welcoming me.
Absolutely. And we have I shouldn't say like anything other than like my wife, but it's Whitney who's helping me with the room and coordinating everything and is basically the COO of Value Technology Foundation, a 501c3 nonprofit that evaluates the cryptocurrency and blockchain realm. We support some major agencies with our education programs, and we also try to create opportunities to help with education and in terms of new technologies. So Sultan, without further ado, we have Sultan Meiji with us, who is the inaugural Chief Innovation Officer at the FDIC. Previously, Meiji was Chairman and Chief Executive Officer at Neocova, an AI-focused financial technology firm that he founded and headquartered in St. Louis, starting his career at the National Center for Supercomputing Applications, where he developed artificial intelligence systems and first-generation internet technologies. He had provided senior business and tech leadership at organizations including ABN AMRO, American Express, Monsanto, United Airlines, and more. An active entrepreneur, Sultan has launched and sold a number of businesses, and he has served as an advisor to the U.S. Treasury, FDIC, OCC, and the FBI, as well as the G7 and United Nations in the areas of cybersecurity, quantum computing, and artificial intelligence. Meghi is a professor at Washington University, as well as being a scholar for the Carnegie Endowment for International Peace, as well as a fellow at the George Mason National Security Institute. His published works topics include artificial intelligence, biotech, big data, analytics, and startups. Welcome, Dr.
Well, it's great to be here, and I will say it's not doctor, just Mister, but please call me Sultan.
All right, very good. And Sultan, thanks again. We're in this new club. Please follow the club at the top, but in the house where we're calling it Bank to the Future. And so as we have so many changes happening in the world of banking, we wanted to ask you a few questions. Why don't you start out just a little bit about what your new position is and what the goals are and how emerging technology would be important to an agency that really just deals with deposit insurance at banks. So it may not be immediately obvious.
Well, it is kind of interesting, and one of the things that I think the current chairman has done a fantastic job on over the last few years is highlighting that the banking system is far more than just deposits, right? It is the lifeblood of so much of what we have in our country. And one of the things I think about is I go all the way back to the end of World War II, and this is gonna be a long story, so I'll apologize in advance. That at the end of World War II, we had to rebuild so much after the fascists and the Nazis and everyone else, and we needed to create an economic system that would allow for that rebuild to happen, but also encourage people to get into that system. And so, out of something called Bretton Woods, we created things like the World Bank, the IMF, and the FDIC at that point was only 12 years old, and through the 20th century, on the back of the American banking system, the world has prospered. And so our current chairman a few years ago basically said, okay, great, that was the 20th century. But what's next? What's that 21st century look like? What's coming? Is it technology, kind of all these threats that might be coming through cybersecurity, cyber issues, but then also what can we do to make sure the banking system is working for everyone and that people aren't disenfranchised out? And how can we build a more inclusive and resilient system at the same time? And so, that was what really attracted me to this new role at FDIC. It was the fact that we had a chairman who had a very broad vision about what we could do, but then also saw this huge opportunity leveraging technology in the banking system to be the vector by which we can do these things. And so I very happily joined, about 6 months ago. And, since I joined, we've done a couple of things, but the first was to set a vision for this group, this new division inside of FDIC, specifically focused on four things. Number one is being the most inclusive banking system in the world. How can we make sure that every individual, every small business, every possible actor in the banking system can find a place in the system? And the system could have done, hasn't exactly done the best job of that over time. And so that's our inclusion program. We have a second theme focused exclusively on resilience. And in the face of ransomware as a service and a variety of other new threats coming in this massive expansion in the threat landscape, resilience has to be, very top of mind. The third is around amplification. And if you were at the FDIC, you know that it's not exactly the most automated digital organization. It's and so there's a lot we can do, not just in terms of the FDIC, but other regulators as well as amongst the banking system to make it as efficient as possible and really make sure that people are amplified. We're all in a mobile app right now. We're all doing things with three taps of our thumb. There are people across this banking system who spend 45 minutes of every hour, hand on keyboard, copy pasting data from one legacy system to another and things like that. And then finally, I worry about the future. I worry about protecting all of us against that while making sure there's space for innovation in the system. So I'm thinking about things like quantum computing and artificial intelligence. And, now that we have Ethereum nodes in orbit, what does that mean? And what happens when Elon Musk puts a bank on Mars? These are questions that have to be talked about in the regulatory system because we have to get proactive. We can't just wait for someone to throw an application at us and say, "Oh, by the way, we've launched a branch on Mars. How are you going to examine that?" That becomes a very deep and interesting conversation that one can't solve in about 5 seconds.
I do remember being asked to bring pencils on my first bank audit when I was slated out in the Midwest. So I hear you about the amplification side, and we don't know what these are the problems. That it's figuring out the future. I thought you were going to say maybe what Elon Musk was going to tweet next, but obviously going to Mars and opening a bank is really there's no boundaries here. Marshall, feel free to comment or jump in as we talk, and then I'll ask my next question, which is about you talked about, or at least on the website, it talks about data is the new capital. Sometimes data has now been compared to like oil. Could you explain some of what you see as your favorite possibilities for a data-driven use case innovation for banking in the US?
Oh my gosh, we'll be here for 2 hours if I list off all the good ones. I mean, there are just so many opportunities for that. Let me talk about a few. The first is, people work differently now than they did 20 years ago. We went past side hustles, and then during a pandemic, people's livelihoods have radically altered. And I think a lot of the things that we've used historically for understanding risk in the banking system, traditional Fair Isaac as an example, isn't necessarily enough. And so I think there's a lot of very interesting work going on right now looking at alternative data used in credit worthiness and underwriting and a variety of actions like that. So that's on the front end. On the back end, banks have orders of magnitude more data on a daily basis. When every bank account has 10, 20, 50 times as much transactional activity going on, there's just so much more data in the system itself. And we can understand the behavior of our overall economy far more thoughtfully than we used to. I think one of the biggest challenges we have is we don't necessarily know how to unlock that data. And so I'm a big fan of what people call open banking initiatives, ways where we can unlock that data and let people figure out creative and interesting ways to derive value from it. But there are two examples, one on the front end side and one on the back.
If I could follow up, I know for me and being in these clubhouse rooms a lot, I'll get asked the question about like the concept of open banking, and then there's sort of in our world there's the distributed ledger technology, and then permissionless environments. Could you just take a moment to explain what open banking is for some of the folks who've joined us, and then comparing that against maybe what we might think of as a permissionless environment, and how maybe DLT and banking might work well together?
Oh, so it's really interesting. I think if you were to ask 10 people what they define open banking as, you get 11 different answers. For me, it is very simple. It is creating banking infrastructure such that as you go forward in time, third parties are able to access that data that is created by that banking infrastructure in a straightforward way, through an API or something like that. So much of the banking technology out there is, old school. There are no APIs. They're barely databases from even a straightforward perspective. So open banking is simply this notion that you can design technology in such a way that you can get the data out of it and then do interesting and valuable things with it in the future. So that's my definition of open banking. You asked a multi-stepped question there that gets all the way down to distributed ledger, and let me walk back just a little bit. So, open banking is a huge value. The fact that we don't have open banking creates tremendous friction in the system right now, and whether or not it's banks paying extra fees to create APIs or get third parties into their systems, or a variety of other areas. But at the end of the day, it creates friction in the system for the institutions, for the regulators, for the average consumer, even though the average consumer might not necessarily see it in their daily lives. Open banking would really solve a lot of that. I'll draw a direct comparison. Back a million years ago, I was very fortunate to be at NCSA in the early 90s when something called Mosaic was being built, and that was one of the first web browsers. It was the first one that really took off, and there was a big debate in that era going on between different technology platforms that one might use to create platforms to share information across the internet. So this is before the web, so Tim Berners-Lee and others were talking about the web and what would become, HTTP and HTML and things like that. And then you had other competing technologies that were closed, that had, a much more kind of traditional mainframe style, strategy behind it, or like an old library where you'd have to go to a place and have a special application and log in and all this stuff. And the way we talk about open banking today, to me, is very resonant and very similar to how we talked about the open internet, in the early 90s. And to me, the value that we've seen created by having an open internet, anyone can connect to it. Any technology provider can create something that works on it, whether it's the apps on our phones or websites or any of the Web 3.0 technology or even distributed ledger. It's an open environment. And so to me, that's what we need to get to with open banking, is remove this arbitrary friction from the legacy technologies and kind of private design, if you will. And so once we get to a place where we're talking about open banking, then the opportunity is open to use any technology that people choose to extract value into the next thing they want to do. And if, for a long time, I've been, and I'll be candid about this, I've been very skeptical about a lot of the distributed ledger technologies because I really didn't understand what a good use case was in the universe of fiat currencies. Now, obviously, we're evolving to have a different conversation. But distributed ledger is very similar to something called the network database, which has been around for a very long time. I think some of the implementations nowadays are much more interesting and much more powerful, and I think there's a lot we can do with them. But the first step is open banking and getting to a point where all the systems are open and communicating with each other in a thoughtful way, obviously wrapped in appropriate security. And then you can have the downstream discussions.
Yeah, absolutely. And I definitely didn't mean to jump the gun, but I know how important open banking is. So I appreciate you clarifying that for everyone. I just want to take a moment to reset the room, and then I'm going to turn it to Irina with some questions for you as well. Sultan, I know you already heard this, but just for anyone that was new, I started this a little early. So previously, Sultan Meiji, who's now the Chief Innovation Officer at the FDIC, was Chairman and CEO at Neocova, an AI-focused fintech firm he founded and headquartered in St. Louis. He started his career at the National Center for Supercomputing Applications, where he developed artificial intelligence systems and first-generation internet technologies. He's provided senior business and technology leaders at organizations including ABM Ambro, American Express, Monsanto, United Airlines, and more. An active entrepreneur, Sultan has launched and sold a number of businesses, and he has served as an advisor to the U.S. Treasury, FDIC, OCC, and the FBI, as well as the G7 and United Nations in the area of cybersecurity, quantum computing, and artificial intelligence. He is a professor at Washington University, as well as a scholar from Carnegie Endowment for International Peace, as well as a fellow at the George Mason National Security Institute. Sultan, again, it's great to have you here. I know I'm really excited. Irina, I'll turn it to Irina now, where she can ask some questions regarding your first tech sprint that you've launched, and we can do a little more deep dive into some of the programs that you're working.
Thank you, Jason. Hi, Sultan. It's very nice to meet you virtually. And, we are excited that there is an innovation officer at the FDIC. As you can imagine, in Metallicas, we are, hands deep, knee deep into creating things. And it's very, I'd like to commend you and compliment you on the fact that you are coming in at the regulatory level with similar goals of actually doing and implementing something versus discussing and theorizing about the technologies and the future. So with that said, I'd like to ask you about the tech sprints that you are implementing in the programs that you're putting in place. The first one, I guess, being the breaking down barriers, reaching the last mile of the unbanked. Can you tell us and the audience a little bit about that, please?
Absolutely, Irina. It's great to meet you, and again, thank you guys for having me. And actually, I was just I need to remind myself, as a fairly recent employee of the U.S. government, I need to now talk like a lawyer for 30 seconds, and I'll do that, and then I'll answer your question, which is to say, these are my views and only my views, and not the views of the FDIC, the U.S. government, the president, the chairman of the FDIC, or her dogs. This is a disclaimer that I have to put out almost every time I speak publicly, so I appreciate you letting me say that again, and I'll stop talking like a lawyer now. On to the question of the tech sprint. So as I was saying earlier, we have these 4 themes of innovation, and the first one being inclusion. And I am of the very strong and powerful belief that the single biggest way to get more people in the financial sector, get them in the banking sector, and get them active and moving through it in a positive way is through technology. I am absolutely convinced that the methodologies and philosophies of community banking can still be extended into the digital banking arena, and that there are far too many Americans, tens of millions of Americans, who don't have access to good banking products and services. And that just frankly offends me. And so we created this first tech sprint specifically focused on what I call the last mile problem, which is how do we get all of these fantastic banks in a position where they are reaching the customers, and that the customers are aware of the programs out there, the great products and services out there. And so we created this first of its kind tech sprint here at FDIC. We are moving from we just actually closed applications. I think it was just last Tuesday, actually. And we're going through and evaluating all of them. And after a cursory review, I can say that I am just so excited about the different applicants. We have everything from tiny startups to banks, to minority depository institutions, to tech companies, and kind of everyone in between. And all of them have this common thought about how can we look at data, tools, other technologies that can help players in this ecosystem meet the needs of people who are unbanked and do it in a cost-effective way. For a lot of our banks in the United States, technology is the single largest non-interest expense, which is just strange to me. It shouldn't be that expensive. These technologies, for the most part, are fairly commoditized. And then how do we analyze this in such a way that we can measure it better? Because I think we still struggle in some ways to really understand, what the scope of the problem is. And so I'm really excited for this program. I think we'll be talking about, the announcements of this first cohort here very quickly, and then we'll have some follow-on activities after that that'll culminate in a nice demo day, and we'll get to see some of the great projects the teams have put together.
Yeah, thank you. We're very excited for demo day. I personally am. I'll also speak like a lawyer just for myself, because I think it'll be interesting to see how real applications can help the FDIC's, and the regulators' definitions of the last mile um, for the unbanked. Can you talk a little bit about the rapid phase prototyping and what it is and how you're looking at it?
Sure, happy to. So rapid phase prototyping was a project that I call, kind of reporting as a service. One of the biggest challenges that the entire ecosystem deals with is how data is managed, reported, analyzed, and then kind of funneled into the regulatory system, and then how we manage it and analyze it, whether we're talking about any one institution or across, all of the 5,000 or so banks in the country. And so what we did over the last year almost is work through a series of programs where we took an initial set of applicants specifically focused on this problem. And we kind of ran them through a series of phases through the winter and into the late spring. And I think it was a little over 30 companies that originally went into it. I think by the time we got to phase 3, it was 11, and have just kind of worked through that program. On the back end of that, we don't have anything else, especially to talk about today. But today isn't tomorrow, and so you expect to hear more about what comes next with rapid phase prototyping.
Exciting. I'd like to move a little bit into a different direction and ask you about AI, supercomputers, and quantum computers. Can you talk to us a little bit about that and the views over there? Yeah, I
Oh,
know. Fun
yeah.
topics.
This
Wait until
this
Marshall gets on.
Yeah, I mean, just wait till we start talking about different methodologies for Monte Carlo simulations inside of quantum computers. I mean, that's the real joy. I'm sure that'll kill half the people listening to this. Yeah, so I mean, let me take this apart a little bit. What we used to call a supercomputer in the 90s is basically the same speed as my phone today. And so we have to take into account the fact that computers have gotten tremendously more powerful with lots more storage and lots more connectivity, which is great. The interesting thing that we're discovering, especially in the banking sector, is that there are so many opportunities for thoughtful use of artificial intelligence, and it's everything. Almost every function can be is a potential opportunity for artificial intelligence. And so that's one piece. I hesitate ever to give advice about artificial intelligence in a regulatory context, and certainly I'm not speaking as an examiner or anything like that, but we are at a moment where there is so much opportunity to use artificial intelligence in the banking system. It's an amazing opportunity for value creation across the spectrum. There's a lot of discussion in the sector right now about the risks or concerns about using artificial intelligence on the consumer facing side in terms of making decisions about credit worthiness or lending decisions or something like that, and lots of valid discussions there. The thing I try to remind people, though, is that is less than 5% of the use of artificial intelligence in the banking system. And there are significantly broader applications for it that are far more mature and far more valuable. One example is using artificial intelligence to streamline back office processes, and there's a lot of opportunity there. Another one is looking for fraudulent behavior or money laundering or terrorist financing, things like that. Huge opportunities there. Looking at ways to navigate the myriad of different technologies and data storage environments and data architectures. Huge opportunities there. And then there's all sorts of layers on top of that in terms of doing analysis such that we can look at risk in new and interesting ways. if you were to look at the risk of the banking system in the mid 1980s, leading up to the savings and loan crisis, and compare that with the data leading up to the 2008 financial crisis, some things were the same, many things were quite different, and in many cases, the data was so much broader that I think it's difficult to make predictions in the same way. And so there are great opportunities there. And with the advent of cloud computing as the most secure environment out there, generally speaking, we now have the ability for anyone in the world to have access to a supercomputer with the click of a mouse or the tap of a phone. And with that, the unbelievable advances in underlying technologies allow people to launch artificial intelligence in no time. So I used to program. I was never an amazing programmer. I was always kind of okay. And the great thing was 90% of what I programmed was within research contexts. You'd never want me writing something production ever. But the really cool thing is with my laptop, I went off about a year ago and I downloaded a bunch of libraries. I did some Python scraping and some other stuff, and I figured out how to do some very interesting analysis using social media and some basic risk modeling to look at places where I wasn't convinced that the guy who is the guy trying to sell me to manage my stock portfolio had any idea what he was talking about. And so it took me all of about 2 hours to do that, and I used a bunch of NLP to do that. Well, I mean, yeah, I'm conversant with technology, but that's how easy it is. You can go to your computer, click a couple of times, and now it is right there at your fingertips. It certainly makes it as a professor a little harder because 5 years ago, if I had a graduate student proposing using some shallow learning, plus some Monte Carlo to look at risk modeling, I'd be like, okay, that's a semester project. Now it's like an hour project.
I think it's, as I'm listening to you, I think it's interesting that the technology has come all this way, as you mentioned, but also the amount and the way we receive information has also come, has also come very far and all this way, because now, something happens across the world, everybody knows within seconds, and kind of marrying technology to the information we receive so quickly and how does one keep up with the other, I think is going to be very interesting. And especially in banking, that nothing is a secret anymore, nothing is anonymous, and everything is regulated. Technology and information is working together and will continue to work together to implement that. With that said, I'd like to pass it on to Maria to see if we have any questions from the audience in this kind of little break. Sultan shared a lot of very important information with us.
Yeah, I definitely want to open up the floor to our audience. We have so many people in the room right now. Before we hop on to the next topic for Marshall to ask some questions with Sultan. So if anybody has any questions, feel free to just raise your hand and I can give you the mic.
And this is where I can sound a little bit like a lawyer for 2 seconds. So we want to really hear what people's thoughts are regarding the technologies. And please raise your hand and come up and ask a question to Sultan. I know it's intimidating, all his knowledge. I'm intimidated right now. So, but please raise your hand. And again, if you have tech concepts, how it's going to integrate into banking, whether it's AI, quantum computing, please raise your hand and ask questions. It's great that to see so much time being spent by a regulator with folks like this. It doesn't happen every day. So it's a great opportunity if you want to raise your hand or take a little time and think about it. While I wait to see if people are going to ask some questions, Sultan. I saw you. Go ahead. Sorry, Sultan. I didn't know if you were going to say something. I didn't want.
No, I was just going to say, yeah, I would love to hear the questions from people listening. I think I might be the first federal regulator to do a clubhouse, and so I am very happy to do this. I think it's awesome and exciting. I love the fact that my favorite Bored Ape NFT is my profile picture on Clubhouse and Twitter today for this. But I have to say that I really can't wait for some of these questions because, in my world, I have to listen a lot. I really do want to hear from people. And people talk about listening and then they just listen to the same 3 or 4 talking heads. That's not how we're running this shop. So I'm excited to hear questions from.
I just wanted to chime in and say how cool it is that Sultan's head is a Bored Ape Yacht Club, and he is a federal regulator talking about the history of the internet going back to Mosaic and here we are having this clubhouse. I just want to say that I went into Telegram and said to people in the crypto community, you should come in and listen to Sultan and what we're talking about now, because I think this is a moment in history.
Yeah, absolutely, absolutely. Maria, sorry, I didn't mean to step on your toes. I'm used to when people come up. Uh, but it looks like we have Joshua. Did you want to queue up Joshua first?
Yeah, sure. If I can go ahead, I guess.
Yeah, yeah, Joshua, welcome to the stage. Please, your question for Sultan, and anyone else, just raise your hand. We'll bring you up to.
Wonderful, wonderful. And let me just say here on that whole kind of quick recap and history of the evolution of technology and innovation, all the way up to what kind of avatars and digital identities are starting to look like today. It's all incredibly exciting. So I wanted to ask a question about the intersection of some of these technologies and and a big topic that's been in the news recently and in our lives recently over the past couple of years, which is the best practices around security and ransomware attacks, right? And so there are a lot of vectors, right? But the primary vector is human vector, right? For falling for phishing, things like that. But a lot of the rhetoric and conversation has gone towards things like trying to have extreme, trying to have very, very large surveillance capabilities on different types of technologies, trying to crack down on distributed ledger technologies, things like that, kind of trying to hit on the payment rails that the ransomware folks use, right? And not as much conversation on the internal operations, the ways that AI can help prevent insider threat issues or prevent phishing, things like that. And so I'm curious what some of your thoughts are on that balance as far as tackling the human side of the threat vulnerability versus tackling the payment rails around things like crypto when we're looking at a situation that is as serious as ransomware attacks that are hitting not just the banks but other places too.
Wow, Joshua Alligator Loki variant. That was awesome. That's a great question. And you call out two things that I will highlight that I agree with very strongly. Number one is the human element is still the critical element. Absolutely 100%. The pipeline that got taken down by ransomware, that's because a single person clicked on an email and then they discovered a default password, right? So there's that. That's number one. The second one is that, and it's implied in your comment, is that there's just all this debt in the system, old technology out there and all of this, and then you talk about adding new technology on top of it, and all of a sudden the vector between those two becomes a true opportunity for nefarious actors and fundamentally alters the threat landscape. Yeah, so 100% I agree with that. It used to be that ransomware or getting taken down by hackers, this is more broad, I'm not just talking about the banking system, was considered like a laziness tax almost. It's like, I didn't invest enough in cybersecurity last year, so I'm getting taken down by hackers this year, or something like that, right? That is no longer the case. The use of cyber is fundamentally changing into a full-on vertical environment, similar to how you might consider a weapon of mass destruction. You have chem, bio, nuclear, and cyber. It's kind of almost at that level, in my opinion. Every aspect of our lives is governed by technology, one way or another. And it doesn't matter if you're using a Tesla on autopilot on the highway, or your Siri alarm is going off, or anything in between, right? And so the fundamental interface between humans and technology is always going to be a big vector of attack, number one. Number two is understanding the right philosophy into it, and then making sure your people are trained the right way, right? I know a large number of people who are kind of important people with fancy job titles who only carry iPads because they know the opportunity for them to be hacked or for things to happen is hugely limited, because their lens to that is quite low, which is really interesting. The other side of it, of course, is that the vast majority of what I'd call legacy IT organizations still think about being kind of mechanics with a toolbox and wrenching things themselves and all of that. And they haven't moved to this kind of more service-oriented model where you pay for the result, you don't pay for the process of it, which again, I think is a good evolution. The other thing that we have to accept is that there are a lot of people, and I'm old enough that I count as this, who were born analog and have been kind of trained to be digital over time. I'm lucky because I was there early on when a lot of these things were happening. But a lot of my peer group, you know, I know many people who struggle to change the ringtone on their phone, or sometimes get confused about if they're in an app or a web browser on their phone, right? And that kind of technical literacy is a big deal. And the farther we get down, the more that technical literacy is going to become a bigger and bigger problem across these threat landscapes. And then you see the bad guys having significantly broadly more capable technologies. Ransomware as a service didn't exist a few years ago, and now any one of us could, with very nominal effort, go out and within 24 hours have a targeted attack on something we didn't like because we feel like doing it, and we can click through the 3 or 4 places we need to do it. It's a huge change to the environment. It's something I think should be top of mind.
Thanks a lot, and thank you, Joshua, for your question. That was great. Someone DM'd me a question, and they wanted to better understand, with your background of quantum computing, how that could change a lot of things that we have today, whether it's blockchain technology or other technologies that we have that might be disrupted by something like quantum computing. What risks are there to the banking system with quantum computing?
Yeah, again, a great question. I want to know who DM'd you that, because if they're looking for a job, I'm hiring. The So very quickly, there are three basic thrusts of investment in quantum computing globally right now. One is on general use quantum computers. Replace a cloud server at Google or Amazon and with a quantum, and it's significantly faster, but fundamentally the same construct. There is a second one that is focused exclusively on what I call specialty use devices. So whether or not it's a chip inside of a satellite that's trying to do some sort of quantum encrypted network like the People's Republic of China is doing, or a variety of other actions like that, or X-ray or whatever. And then there's a third that's kind of the side card, and it's very similar to how we use GPUs in AI in particular right now, where you have a card sitting on a bus and you're programming against an API against it. Not in the first category, because we're still quite a ways away from general availability of high quality general use quantum computers. I mean, this isn't the next year or the year after, where I think experts are telling me 5 to 10 years. I think that's probably right. The other two categories are coming sooner, and in both of those situations, two things could happen very quickly. The first is devices could be targeted at our existing cybersecurity infrastructure, by which I mean things like RSA encryption, and could penetrate them in real time. So just imagine if HTTPS ceased to exist, right? All of a sudden, every medical action, every financial transaction, everything would just poof, be freely available. Second one, since people are talking about cryptocurrencies, I talk about digital assets as a broader category, so let's just use digital assets if that's all right. Digital assets have thus far seemingly done a pretty decent job of being fairly well engineered from a cybersecurity perspective. You don't hear about big hacks and people messing with the hash in any of the cryptocurrencies, right? What if all of a sudden someone could point a quantum computer at pick your cryptocurrency of choice and just move everyone's wallets into their own, right? That's the kind of thing that could conceivably happen with the right kind of specialty use quantum device. As we go down this universe, there are going to be many opportunities for bad actors to drive a program like this. And we have to be very cognizant of the fact that we need to start investing and putting energy now into quantum resilient encryption. So NIST, which is the National Institute of Standards of Technology, is running a program to build kind of a post-quantum next generation set of encryption standards for us to use. So HTTPS becomes HTTPQS, if you will. That will come in advance, one hopes, of offensive quantum capabilities that are available to bad actors. But then we have to roll it out across the entire ecosystem. That transformative change of putting that kind of extra layer of cybersecurity and evolution into the environment is not just a software change, because it's a software and a hardware change. a huge amount of the hardware we're using right now is just not fast enough to do the math. And so a lot of legacy hardware is going to go away and going to have to be replaced. You're talking about decades of transformation. So the I can't even think of a comparable moment. A lot of people talk about it being like Y2K. I think it is logarithmically more than Y2K in terms of the change that's about to happen. And so I don't think we can, I think we have to put way more energy into this. I think we should absolutely be putting a lot of planning into this. And even if NIST is ready by 2024, that's only 3 years away. We have a lot of work to do to get there.
Great. Thank you, Sultan. And Michael, welcome to the stage. Michael, do you have a question?
I do, yes. And thank you so much for your time. My question is, as we see the greater and greater adoption of cryptocurrencies in the banking systems, and you have smaller and larger banks looking to add digital asset custodialship to their books, how do you see the FDIC coming alongside to help ensure that you don't have smaller banks leveraging themselves in a way that could adversely affect some of their customers if you see the prices swing up and down and they have to make a drastic action?
Yeah, it's a great question, and sadly, this is one of the places where my day job will preclude me from really giving you a big answer, except to say that it is not a there is no bank in the United States that has crypto on its balance sheet that has those assets FDIC insured. That's not legal, and certainly not as it's understood within the system right now. There are a lot of players, acting in this space. I think, there's a lot of policy and regulatory actions going on in the background that I'm aware of. Some of them I'm certainly not aware of all of them. I certainly can't speak to it as a formal action. I think, beyond that, I would say that, if you talk about digital assets, there are amazing opportunities to use distributed ledger technologies in very effective ways in the banking system. I think there's some great use cases, especially around zero knowledge proofs. I think that's an awesome area for people to put energy in. I am not a fan and certainly won't comment on small banks getting into cryptocurrencies in any meaningful way, sadly.
Yeah, sorry, Michael. Yeah, we want to keep the focus on like the technology. Um, if I could just follow up, Sultan, maybe how is it from your standpoint of view on current FDIC insurance? That and where technologies may aid banks of all sizes with calculating what the correct insurance is that is for individuals. In banks, large or small. Should a bank ever close, and what that means, and how you see technology affecting that core element of the FDIC.
And this I appreciate the reframing, because I think this is an important point that I wish more people knew. Is that if you have money in an American bank that is FDIC insured, you will never lose that money. If that money is just sitting in your checking account, great, it is in your checking account. If something happens to the institution or there's a hack or any of those things, that's what the FDIC insurance does. We have something called a deposit insurance fund, and that pays for any issues there. And that to me is a fundamental difference between an American bank and anything else in financial services. And to me, it makes me sleep very well at night knowing that at no point do I have to worry about the variability of a tweet based on a tweet or something like that to know if my checking account goes to a negative balance or something like that while I'm asleep. There are so many amazing opportunities, and we're making use of a number of them already to make sure that we're analyzing data correctly, so that not only are we making sure that our insurance fund is managed correctly, which we have an entire division that just does that, but also make sure that that's aligned to where the market is, aligned to where the banks are, et cetera. One of the things that I learned only after I joined, and it got me very excited, is that the FDIC has been using artificial intelligence in analyzing data from banks for I think it's like over 4.5 years now. They've had this entire program around it, and it's really cool. And we're working to a point where I can talk about it publicly, because I think a lot of people listening to this get really excited at what it does and how we're doing it, and how it fits very nicely inside of the statutory structure. It's just great. But the FDIC, for those who don't know, and maybe this is maybe you and I are speaking too much inside baseball here, here, but the FDIC fundamentally has two jobs, right? Number one is, by statute, going all the way back to 1933 through 35, and then some stuff in the 2000s, we are fundamentally responsible for the safety and soundness of the banking system. And there's some different words that different people use around it. And I'm not a lawyer, and people can parse what I just said a bunch of different ways, but fundamentally we do that. And so we examine banks. We look at them. We make sure that they exist and that their balance sheets are correct and they're managing things correctly and they're not being discriminatory and a bunch of other things like that. The second thing we do is we have a deposit insurance fund that is there to support with the full faith and credit of the United States government every American that has a bank account. So if you have a bank account, you go to sleep at night, that nothing's bad's going to happen to it, or if it does, it gets immediately turned around. And by immediately turned around, I mean this is a system that I think a lot of people don't realize. This is not like an 8-year program. It's not months or weeks or anything. Like if something happens to a bank on a Friday, you're good by Monday. I mean, it is incredible what these people can do. I've been super impressed by the work they do.
That's great. Marshall, do you want to ask your questions next, and then we'll see if there's other folks in the audience who may want to ask questions.
Sure, that sounds great. Thanks, Jason, and really interesting listening to you talk, Sultan. I'm just learning. I think myself and everyone here in the audience is learning so much from you. My questions, I'd like to start it off with, and you date back kind of with your work to early internet. So you had mentioned to me that you had worked on early HTTPS, and there are many different codes, web codes, such as 404, can't find a page, 403, access forbidden. These are the HTTPS access codes. There was a code 402 for web payments. Never got used, never got implemented, and now it feels like with the advent of cryptocurrency, that may become a reality. Where do you see kind of the protocol of HTTPS and web and the intersection of these payment protocols? And do you think that, in your personal opinion, not the FDIC's, that this may begin to intersect into the world of banking and payments? And from your early web perspective, how do you think that happens? Do you think that we'll see a 402, like a payments printer style pop-up list with your payment providers into the future? And if so, do you think that might be using something like stablecoin or distributed ledger or blockchain?
Wow, what an interesting question. And man, calling out the 402, that's I think this, as they say, a deep cut. I am too old to be that cool. So I appreciate that you prefaced all of that with the caveat of my personal opinion. So it's really interesting. If you go back to the 90s, there were three very interesting discussions that I think went the wrong way in the early days of the internet. The first was specifically around digital identity. There were a series of projects that said, should we embed identity, like an individual's identity, a corporation's identity, a university's identity, the identity of a piece of data, almost like an ISBN number. Could we embed that directly in the infrastructure and architecture of the internet? That did not go forward, and I think that was a mistake. The second one was embedding directly in the internet encryption. Same thing. Didn't go there. It was always, we'll get back to it later. Again, I think that was a huge mistake. And the third was understanding that there were verticalized applications that would sit on top of the internet that needed internet infrastructure level engineering into them at the beginning. Financial services, payments is one great example of that. Medical records is another great example of that. What we would now broadly call IoT in terms of industrial applications was part of that. And I think you have just highlighted to me, for all the good and all the things that we get excited about the internet, I am absolutely convinced that those three things were something that we should have continued to put more energy into, and I'm very disappointed we didn't. Okay, so that's the first half of my comment to your question. The second one is that I think there has since then been a strong bifurcation away from internet infrastructure and what we call layer 7. So OSI stack, for anybody from computer science, layer 7 activities. I think all of this is going to land in layer 7 because of those early decisions. And so do I think a 402 will come back? Probably not. I think it'll live in the application layer, if you will. And I think for the foreseeable future, it will be many different versions of many different opportunities. For those who get very excited about cryptocurrencies, I think there's a lot of discussions there. I'm not going to say a whole lot about them, but I would highlight one very specific differential that I worry gets lost in the discussion. One is fiat currencies. Those currencies like the US dollar that are fundamentally sovereign objects. The US dollar is owned by the government of the United States, right? That is how that works. That digital versions of that have existed for quite a while, whether it was using third-party payments infrastructure or credit cards or a variety of other things. So we are using digital money to a degree already within that fiat currency infrastructure. I can't wait to see if there's a way to take very new and advanced technologies and apply them to this. So, for example, the Federal Reserve's central bank digital currency program is one example of that. I think we're seeing some other activity in Europe that's quite interesting, and other parts of the world. The ability for us to remove the friction and create seamless financial services through applications of these technologies, I think is going to be amazing. I can't imagine an environment where in the next 50 years, fiat currencies go away. Because I can't imagine the government of any country saying, I'm going to give up my currency. I just can't see that, given the fact that we are there's more capitalism in our planet, on our planet right now, than there is even democracy. And so if you were talking about organizing principles for the world, it is our economic governing principles are capitalist based on currency. That is, I think, one of the more interesting challenges is how we take these really interesting advances in technology, and those that we know about now and those that are coming, and apply them to that model. I can't wait to see what happens there, and I have no idea how that's going to work. I am not going to predict any of those activities. I am far too humbled by my own failures to predict things, including flying cars and
Did I lose you guys? Or can everyone hear me? It went
We can hear you.
quiet on my end. Okay,
Yep.
cool. Sometimes Clubhouse does this like burps a little bit. That was so cool, Sultan. I really loved your explanation, and I agree. I think it seems like magnetic links and things like that, where the applications directly interface. I would say kind of a big success that I've seen over the years is MetaMask with Ethereum. Has kind of become very popularized as kind of a payment plugin and application in the browser where people are using payments, and it's really interesting to see some new and innovative models like Axie Infinity with like gaming models where people are playing to earn, because I think it's really changing the landscape of the internet. And I've been following that story very closely. It's really interesting to me. What you said brings up the next question I have for you, which is something that we had previously spoke about, which I feel will underpin the future of the web. When people talk about Web3 technology and talk about the intersection of blockchain and banking and payments, how can we have an open banking system unless we have decentralized portable identity? And that to me is really interesting. I believe that that's where the web is going, into this concept of a sovereign identity on the web, where you have more control of your data, where you have the capability to port your banking. So if you wanted to, move from one bank to the other or open a new account, the risk of data being compromised, and also your ability to quickly identify without maybe sharing data like your SSN or information that very frequently ends up in data breaches, unfortunately. I feel that is the future of the internet. I wanted to get your thoughts on where do you think decentralized identity is going? How does that play into the open banking landscape? And what do you think that can provide for regulators in the future? Your personal opinions in terms of how these systems can evolve in a way that regulations can acknowledge them and simultaneously give pathways like what the FDIC is doing with the FDI tech sprint. How do you see digital identity playing a part of the future of banking?
Oh, such an interesting series of questions. I'll answer the last little bit first, which is just as a human, I would love it if we had some degree of digital identity, and I think it would make the regulatory environment much more straightforward, not just for FDIC, but for a variety of others, including law enforcement, because then when people are doing KYC or money laundering checks and stuff like that, it's all very clear. I have an older mom, and occasionally I'll send her money just because she's, I'm trying to help my mom out, and a decent amount of the time it'll get flagged for something, and I have to kind of do another cycle, and it's not like my mom is in a terrorist camp in some terrible part of the world. She's retired to Florida like so many other people. And so it's kind of fascinating to me that like even though I might send her the same amount of money every month, a decent amount of the time it gets tagged for something, related to this. When in reality they go and they look like, oh yeah, it's son sending mom money just like he does every month, but they don't always catch it that way, right? That's some of the legacy technology. I'm gonna push back on your question only in one little detail. There is I think it's very easy to think about the world strictly in terms of centralized and decentralized, right? Centralized finance versus decentralized finance, as an example, right? I'm gonna tell you, I'm gonna propose that there's actually a third category called federated between the two, where it lives in both. And the best aspects of both can be federated. So while I might have a national identity and I carry a passport and I have a driver's license and all the other normal things, I also have a decentralized identity in my membership in Bored Ape Yacht Club, which I think is just awesome. And I love that community, and it's an awesome, cool group of people. That is a decentralized function, right? If someone were to be looking at me as a likely, lender or something like that, some of that information is going to be valuable. Others will not be valuable for them to make that decision. And so to me, I think I'm very confident that it will not be either or, it will be both. And that will exist in a federated model. And so while some people might have identities that exist inside of different distributed ledger environments, or within different affinity or consumer or community groups, and then in more centralized environments. I think that's the way we're going to be going on this. I think the advances in technology that we've seen in digital assets have a huge value to play in parts of these discussions. And I think it's incredibly exciting just in the last 6 months to see how much energy is being put into these discussions around digital identity. I mean, I was part of something called X509 a million years ago, which was an attempt at something like this. And I am just so excited because the conversations have matured rapidly, and we see a variety of different programs being started now, and even in the middle of a pandemic, to solve some of these problems so that people can kind of have an identity that they can manage and own themselves in a digital environment. I think I'm willing to bet that 20 years from now, we're going to talk about how we all just clicked through terms of services on social media networks and didn't really pay that much attention, and they monetized it to the nth degree, and the search engines and all this. I think 20 years from now, we're going to look back on that like we were all insane and look at what we did and look at how all our information is out there just available for everything.
Thank you. And that was, I completely agree. And I feel that the digital identity piece, in the land of crypto, I think there's been some fear of it because exactly what you just said, when you look at the web and you look at kind of the move towards no tracking browsers and trying to move away, and you look at Apple's new Apple sign-in where it masks your email address, right? I go through a new email address every couple of years because it just becomes so infected with spam that I have to move on, right? And so there's the fear of that, of your personal private information. There's the fear of exposing yourself in a way that maybe you wouldn't want to before. And I think a lot of that comes out of the data breaches and kind of the where the web is today. I think if it's done right, it could be really incredible. And I completely agree with you that the future of CeFi and DeFi is a blend. It's not black or white. It's not that one wins over the other. I believe that it's the best technologies combined that will win. So I think that it really, as we evolve with this technology, as we grow and new applications come out and new regulations come out, I think it really will be the marriage, like you said, of both worlds, and really will be that kind of federated technology. That's an approach we take at our company, which is technology agnostic, right? We don't necessarily choose one blockchain or one technology over the other just by name or by affiliation or whatever that might be. We really analyze the technology, and I think that's going to become more and more popular over time, that centralized systems are becoming more decentralized, and fortunately or unfortunately, decentralized systems are becoming more centralized into this more kind of middle ground. And I think that that's where we're going to see a lot of success. So my last and final question for you is, I really wanted to open it up to get your thoughts. What do you think is just the most interesting area of blockchain and cryptocurrency for you?
Well, it's funny, in my current role in the U.S. government, I am precluded from participating in a number of parts of the financial sector, and sadly a lot of crypto lands inside of that. And so I will just highlight Bored Ape Yacht Club. That is the most exciting part of that universe for me right now. I think it's a cool community. I would say, kind of slightly not joking, I'll go back to being, slightly serious. We have great visibility to a lot of companies doing really interesting stuff using distributed ledger technologies. And in many cases, they're using it simply to run better operations. Right. And instead of using mainframes or instead of using Web 1 or Web 2 technologies, they're fundamentally using Web 3 technologies with artificial intelligence in a way that they can build applications faster and more securely, more dynamic data models, more openness is needed, the ability to partner and link things together so 2 + 2 = 5 is incredible. And I think in the last 2 years, we've seen tremendous advances in technology around that. And so to me, I think it's some combination of Web3 plus, AI plus this very strong understanding of economics and the financial markets and the systems and how assets work and insurance and risk and all of this, that I think is so well understood in some of these communities, that I think we're going to discover that this is a little bit of a renaissance in the banking and financial services sector over the next few years in this space, and I just can't wait to see what comes of it.
I just wanted to reiterate, I think that's so cool that you are in these NFT communities as a regulator, thinking about innovation, but personally enjoying it and playing with it, because my message to the cryptocurrency community over the past decade has been, it's not about the trading. It's not about the chasing gains or things like this. The real value is the education and the knowledge and learning and experimenting and joining in these communities and becoming part of these free and open source software communities, becoming part of this journey. That's been my journey, and has led me here to building Metal and building Proton blockchain and working on really cool cryptocurrencies like Dogecoin and Stellar, and likewise with my co-founder Glenn Marion, same thing with as an early Bitcoin J core contributor. I think it's really interesting. I had one last question for you. Something that we're working on at Metal and we're implementing in Proton blockchain, and I've seen some other blockchains talk about this. What do you think about the intersection of open banking, bank payment messaging, and where it interacts with blockchains? I see a future where right now we're kind of in the walled garden phase, and I've heard people compare blockchain where it is today to AOL. And you think about that early AOL moment, you've got mail. That was kind of like, it's cheesy. I've heard people compare this before, but I think there's a good comparison here, because that was kind of the walled internet, right? Where it was the early, it gave you access to the internet and you could break out into the browser and use it, but people were using AOL keywords. They were in chat rooms. They were in a sandboxed internet. And over time, ISPs arrived, high-speed internet arrived, and people started to use web browsers and other technology outside of that, and the web began to open up. How do you see the future of open banking and blockchain payment messaging interacting? Because to me, that seems kind of like the end of the AOL era for blockchain, right? When blockchains can talk to banks and banks can talk to blockchains, where do you think that?
So first off, that's such a cool thought, such a cool question, right? The construct. So I think back on the sound of a modem, right? Because like the first almost decade that I interacted with technology, that was the precursor sound. I would sit down at the computer, I would type away at something, hit a button, and it would start making atrocious noises while I went off and got a drink or whatever, right? And the notion that, and we always have to think about this, right? That was 30 years ago, basically, right? 25, 30 years ago. At that point, I remember very, very vividly sitting there thinking, oh my God, how cool is this that my computer can talk to other things and I can interact with other people sitting at my computer. Like, that was the coolest thing ever, right? I remember when the first iPhone came out, and I'm like, wow, a mobile device in my pocket that's small enough that it actually fits in it. Because 10 years before that, I had one of the very first Palm Pilots with a backpack, so we could do stock trading on NYSE through it as a test bed environment in the right around 99 2000. And so I would say that I think I used the term renaissance earlier. I think we are entering a renaissance based on some of these new technologies. The ability for ledgers to be shared is a big deal. And I think a lot of people don't really understand what a big deal that is, right? And so much energy is spent reconciling that kind of behavior. So that's a big deal. That's a huge opportunity. And I think people are creating infrastructures and networks around that. So I don't know if I would say it's the AOL moment. I would probably think about it in more like, I don't know if everyone here is like sat in a Tesla on full autopilot. It's an incredible thing. It just it's so cool. You yank the stock and you're there and it's just kind of doing its thing. And the first time I did it, I was terrified. And after a week and a half, I couldn't imagine my life without it, right? And as we see these technologies evolve, we are going to continue to see moments where we think back and we're like, oh my God, how did I even live? Before that, right? Without, AirPods or whatever, pick your vector of choice. At some point, we are going to get to ubiquitous financial services, which means all of the different aspects of our financial lives interact with each other in real time in such a way that I know what my rewards program is doing. I know what what my NFTs are doing. I know what, my fiat currency deposit accounts are doing. I know what my public securities are trading at, all this kind of stuff, right? And the notion that new financial products and services are going to be created in environments to take advantage of that free-flowing information, of that shared responsibility and accountability, of the combination of permissioned and permissionless, people are going to start creating fundamentally new things in that space. And I'm just utterly fascinated by it, and I cannot wait to see what comes of it. But I think it's going to be a little bit of the wild, wild west for a little while longer.
I completely agree. I feel that we have to go through this phase of experimentation, and we have to have this this industry conversation with the regulators, where we can evolve both at the same time, because technology frequently outpaces regulation. But I think it is just so cool, this moment in history and this time here in this clubhouse with you, Sultan, with the Bored Ape avatar talking about these things it's just a moment in time. It's so incredible because for those that are involved in technology and banking and payments, it just has to be one of the coolest moments. I think that as we work together, the technologists, the regulators, the policymakers, it really could. When I look at Silicon Valley, how it's really been the global center of innovation, this could be one of the next largest areas of tech in my mind. And I think that's really evidenced by seeing Facebook jump into now called DM, JP Morgan with the Quorum blockchain. I have that same feeling that I had in 1998 and 2002 when I got on Facebook, thefacebook.com. I had that same feeling. For me, it was Napster, it was BitTorrent, which led me to Bitcoin. But I feel that we're at this precipice. And thank you so much for all of your answers today, Sultan. It's just incredible listening.
And also,
No, thanks.
I'd like to say too, thank you again. Just a reminder to the room, this is for the club. Bank to the Future, and the opinions you're hearing is from Sultan Meiji, who's the Director of Innovation at the FDIC, Chief Innovation Officer, excuse me. But these views are his and his alone. And I do want to say I think that this is I'm definitely not as cool as either Marshall or Sultan, but like this is a great way that we found through this clubhouse and others to really get the word out about what like is happening in DC and the way people are thinking about it. And I think that that's really, really important. And I think the discussion, the base of it, the expansiveness of it, and what we can do in the future is really exciting, particularly as we have things like, we don't know what's happening with sort of the COVID-19, and that's really where Clubhouse evolved for me almost a year ago. So I just really appreciate it. I don't know if there are any other questions from the audience. Sultan, I'm sorry, you're cool, but you must be also slightly intimidating. But it is okay to come ask questions if you have them. We also want to be very respectful of your time. So maybe you want to give us some closing thoughts. Maybe someone might have a question from the audience and raise it while you're finishing up. But just where you think we are today. Oh, here's somebody. Let's see. Joshua? Oh, Joshua. Okay.
Yeah, I'm back. You were super inspiring, Sultan. The way you casually dropped the reference to zero knowledge proofs before the digital identity conversation even came up just gave me this thought, which was if every human being who was involved in these conversations about the place these types of technologies should have in our society was where you are right now, then we're going to make it, right? And it was just so incredible. And so, what I wanted to know from you after listening to just this amazing conversation uh, is how your learning journey influences, just as a person, not even as a regulator, but how your learning journey through this path of technology influences how you talk to and interact with, and how you see the learning journeys of other people, because so many people aren't where you are, right? Like, especially people who are involved in regulation, they're coming to this from a legacy perspective where they're trying to plug in these new technological concepts, these new technological capabilities, like things that you're doing with the DAO at Bored Ape Yacht Club, weren't capabilities that were just way too hard to pull off before this type of technology existed. But now this new thing, which all of our previous structures didn't contemplate, has now entered the world, right? So there's this big learning curve that you've already gone on, and that a lot of other people have to go on too. And I was wondering what some of your thoughts are as far as how you're learning and your journey informs how you interact with other people, help them learn, and if there are any things that people in the audience who are also excited about this space could do to help all of us have a more informed conversation as we all try to learn and try to match up the new reality to kind of the way all of our rules used to be.
Well, first off, that's a very flattering comment. Thank you, Joshua. I'll say a couple of things. So first, I'm an incredibly lucky person. I am so fortunate to have the opportunities I've had, to be in the rooms I've been in, to be able to sit there quietly, and in many cases be the youngest guy in the room, and just sit there and listen to the giants of these universes talk, whether it's a Jamie Dimon or a Dimon or a Dick from NYSE or Mark Andreessen or whomever, right, or Mad Dog Hall or whoever it was. I should also preface all of this by saying that all of my experience with technology, everything is based on the fact that I was a real pain in the ass when I was a freshman in high school, and my parents and the guidance counselor basically said, we got to knock this chip off this kid's shoulder, and convinced me to apply for a National Science Foundation grant at 14, as a way of kind of checking me a little bit, because I was a pretty arrogant little kid, and we just moved back to the U.S. from living overseas. My dad was a genetic engineer, and I was not enjoying living in a cornfield in Illinois, and on the back end of that, I ended up winning the National Science Foundation grant as 15 by the time the process was done, and it did the exact opposite of what the teachers did. And I went into that. So from the age of 15 onwards, I've been so fortunate to be able to sort of say, okay, what is about to happen, and how do I get myself in that room, and how do I do that? So that's the first part. And to me, it was entirely self-directed. It was you've got to step up on this. Okay, so that's number one. Number two is, in any environment, I do not speak from my own perspective. I do not expect anyone to understand what I'm saying. I don't know if it comes across here, but being a teacher is really helped me with that. I always try to meet people where they are. I always try to have the conversations with people in the framework and the dialogue and the vernacular that makes sense to them. And so I spend the vast majority of my life translating from either computer science into banker or from physics into legal or whatever it is. And so for anyone listening here, you are all experts in your own way. You are all technically far more competent than a huge number of people I have to interact with. And I put it on all of you to learn how to communicate better and how to communicate with people where they are. I grew up as a third culture kid. What that means is my mom was from one culture, my dad was from another culture, and I grew up in a third culture. And what that means is, we spoke multiple languages at home. I lived in a bunch of different countries. I have clear memories of wandering around Paris as a preteen and a teen, with my friends getting into all sorts of trouble. And then, a year later, I'm sitting in a cornfield, waiting for the school bus, right? And those kinds of dynamic changes in your life, cause you to have to figure out how to interoperate with other people better. And the biggest and most important thing I think all of us can do is realize that not everybody has the same experiences that we have. They don't have the same life. They don't have the same way of operating. And it is up to us as we think of how to make the world a better place, how do we ensure that our species survives, how the better parts of our culture dominate and the worst parts get relegated to the annals of history, is to really focus on the fact that we all have a goal, and that is the survival of our species and the protection of our planet. A couple hundred years ago, we did that by having lots of kids and working on farms and all the other things we did a couple hundred years ago. We're moving into a different environment where our species survival is no longer a biological function. And so that's the thing I would leave everyone with, is to remember that we are moving into uncharted territories in terms of how the financial system evolves, how we as a species evolves, how our planet evolves. And, I'm in this role because I am honored to be able to sit in this seat, but it is within the construct that I'm not thinking about next year. I'm not thinking about the year after that. I might not even be thinking about the century after this. I am thinking fundamentally about the long-term positioning of humanity for the future. And what does that mean? It means space exploration. How do you do space exploration? You have to make it economically viable. How do we make it economically viable? We all have to have far larger, more robust, more dynamic, more frictionless balance sheets. Okay, now you understand part of the reason I'm sitting in the seat I'm sitting in. Okay, so with that, we're at a quarter till. If there are any other questions, I'm happy to take them. Otherwise, I would just like to thank everyone for this. This has been super interesting. Please hit me up on Twitter. Hit me up here. If you want to connect with me directly, go for it. I love these kinds of conversations. This is a cool group of people. Oh, wait, I see a hand. I'll stop talking.
Thanks. And Stav, we had you before, but you were on the phone. So
Yeah,
Stav, if you
sorry.
could ask your question.
Yeah, not so serious question. Lovely listening to you guys. Very refreshing, Sultan. I agree with you on the CFI, DeFi. I'm a big investor in a company called Swissborg in Europe that is at the intersection of those two domains, and it's kind of a meritocracy, which is interesting. But my question to you actually is, after Board 8 Yacht Club, are you looking to buy, or have you bought any bulls on the block?
I have not yet.
But are you looking?
That's a great one. I am cautiously exploring other potential NFT purchases. I will say it like that.
Okay, thank you very much. That was my question. Thank you for allowing me on stage. Thank you.
Awesome. Thanks, Stav. Yeah, so again, Sultan, can't thank you enough for your time here. This has definitely been legendary, and let's do more in the future. And let us know how to help. We'll definitely keep pushing out the word about the fintech sprints and what you're doing over at my former agency, because it's very, very exciting. And we really appreciate you working side by side with industry on this, and helping to promote areas that we all need to think about as a group to make sure we're successful, and don't have some kind of future sneak up on us that we don't want. So it's really, really appreciated. Thank you for.
Well, no, thank you guys for having me. And I'll do one plug at the end of this. So, obviously we're doing tech sprints, RPP will continue. We do a bunch of other things. One thing that I do, if you enjoyed this conversation at all, is once a month I take over our podcast at FDIC. Yes, FDIC has a podcast. And about once a month we come out and we do something really, I make it kind of a different one. So actually the very first one I interviewed our chairman. The second one I interviewed a guy named Jimmy Lenz, who runs the cyber, fintech, and AI programs at Duke University, and man, like one of the best risk management minds in the world. But last week we dropped one, and it was me interviewing the former Secretary of Homeland Security, Michael Chertoff. Michael and I've known Michael for a long time. He's a great guy. And we spent a long time talking about resilience and what that actually means, and talks about like taking a punch and stuff like that. And if this conversation was kind of expansive in your mind and you enjoyed it, you should totally listen to that, not for me, but for him. And he's just got such a unique mind in this space. But pay attention to our podcast. We've got some pretty epic guests coming up here over the coming months.
Looking forward. Thank you so much. All right. Thanks, everybody, so much. Have a great rest of your day. Appreciate it. Sultan, again, thank you. Maria, Irina, Marshall, and Whitney, thank you for helping with the stage today. And everyone, have a great rest of your day. Take care.
Thank you all so
Thanks,
much.
everyone.
Thanks, everybody.
Thanks, everyone. Thank you,
Bye.
Sultan. Thanks, Jason.
Thanks, guys. Bye.